Hello and welcome back to Stock Market Weekly. I'm your host, Evan Medeiros, for Friday, July 3rd, 2025. This is the show where we break down the notable moves across financial markets. Hope you're doing well out there. I am camera off today. It is Thursday. It is mid-afternoon. Markets are closed early. Markets are closed tomorrow for the 4th of July holiday. Hope everybody that is celebrating has a happy, safe, sun-filled 4th of July and some time away from markets. Let's get into this week's headline. Before we do, our sponsor of the show, IBD. They sponsor the show Investors Business Daily, long time now, and they've got a great offer here for Market Surge for anyone that is looking for a new charting platform to do some research, to track stocks, to build watch lists, to find ideas. Check out Market Surge. We've got a link in the description of this show. We also got a link right here on screen for you to try and get a discount. Now, a couple of the big stories this week was jobs. Jobs Friday here, actually was jobs Thursday because of the holiday, but the June jobs report was out. We got 147,000 jobs added. That was better than analyst expectations or economist expectations. And we saw markets, equities push to new highs on Friday. Although if we look at the bond market then and fixed income and interest rates here, we see repercussions that maybe, just maybe, the Fed isn't going to move so quickly. So the July Fed expectations went from a 76% likelihood of the Fed staying the same to 95% in July. So basically the market pricing in that the Fed is not moving this next meeting. And if we look out to September here, so September, the day prior, so before the jobs report, we had basically, a 6% chance that Fed would be at the current levels come September, implying essentially 1 to 2 rate cuts in September is what the market was pricing in. And now we can see that we have a more unclear kind of even distribution of outcomes here. There's a 32% chance as of Friday's data or Thursday's data now that the Fed would keep things as is. So a little bit murkier, a little bit more cloudy, and it feels like this has been the story here of markets dueling with the Fed. The Fed's just trying to kick the can, remain slow and data dependent, and the market keeps getting excited about rate cuts, pricing them in, then they dial it back, and then they get excited again, and then we dial it back. So we shall see another game of cat and mouse, I'm sure, and we'll continue to monitor that. The other big story this week was U.S. banks raising dividends and buybacks. These are the big money center banks, JP Morgan, Goldman Sachs, Morgan Stanley, and that's pretty nice to see. Good performance there out of financials this week and some good underlying health of those institutions. Now, if we get into the performance this week, Russell 2000, here we go, 3.56%. That was the leading index here. Dow Jones up 3, SPY up over 2. Q's up 2%. Most of these indexes now at all-time highs. Here's the S&P 500 this week, up and to the right. So you can see basically just getting a nice lift up here. And here's the 3-month view of the S&P 500. What's not to like about this chart is vertical and strong ascent as one could imagine. And especially over the last 4 or 5 trading sessions, you can see getting pretty frothy here as there's no overhead supply. We're at all-time highs. It's summertime and markets are really starting to ramp up. Volatility index going in the exact opposite direction. You had a little flare up here early in the week, which was barely a blip, and now we're back down to about 16.38, and you can see the VIX is kind of settling in where it's been at the lows now for the past month or two. United States dollar getting a little bit jumpy here towards the end of the week. Again, jobs report probably having a little bit of an impact on this. As you can see, we're starting to push back up, technically still in a downtrend here for the dollar, technically still below some key levels. I think if the dollar index can start reclaiming back over 98 or so, then maybe there's a more sustained rally that could occur. But for now, just got to be a little bit skeptical here. And this is interest rates. So interest rates were headed in the right direction for the past handful of weeks. You can see down, down, and down. But now we're starting to get a slight uptick here. So breaking the immediate term downtrend, starting to push back over 4.3. We'll see if this turns out to be a higher low versus April, or if this just gets sold in and we start rolling back over. Again, jobs report, I think, getting a little bit of a jolt here to these two markets. If we take a look at sectors this week, materials at the top of the list. You don't see that often. XLB leading the charge here this week, up 4%, along with discretionary and industrials. So a very sort of real economy driven push this week. A little bit of rotation under the hood, one might say. So outside of tech and some of the other big heavyweights, we're seeing things kind of expand out to financials, industrials, discretionary materials. These are sectors that really we've been kind of waiting to see if they can start to get some capital, and it seems like they're in motion here. Now, this is our Smart Trend Filter indicator. This is available for TC2000 and TradingView users. You can get it on our website, thetraderist.com. But now we can see that there are 9 sectors, so almost every single sector in a bullish state here for daily momentum, daily uptrends. That's good. That's breadth. That's participation across more than just technology and communication services. So that's nice to see. The two standouts here that are a little bit sluggish are energy and utilities here. And so these are both kind of in our neutral, choppy state, printing yellow dots. And so, we'll see if these can get some love here in the coming weeks. But for now, we've got some laggards. More under the hood action here, 52-week highs and lows. NYSE over 100 for 5 straight days. That's great. Actually, you'd have to go back here for 100. 6 sessions for over 100. Number of stocks hitting 52-week highs. That's good. That's great. We want to see more, but that is at least heading in the right direction, right? We're getting more stocks on the 52-week high list. There's been a lot of folks talking about narrow breadth, and that's pretty accurate, but we're starting to see it now pick back up a little bit. And one would hope, especially after being at all-time highs now in the indexes for the past few sessions. S&P 500 stocks above a 20 SMA getting back up to overbought, kind of stretched, slightly frothy territory. This is where some of the, late comers to momentum start to get punished a little bit. So just keep an eye on that. But generally speaking, more stocks moving up is a good thing. Put to call ratio, kind of dead center. Nothing too much to say about that. Bitcoin. We talked about Bitcoin last week. It was kind of at this, holding pattern, let's call it, kind of a little channel here that it had been swimming in. And you can see it's starting to break out now, starting to move above that 110 area we talked about. I posted a chart on social earlier this week. It's looking good. It looks primed. It looks coiled. We'll see if this one can be the real breakout that sends us to new highs, or if we have more kind of back and fill in this channel for a little bit longer. Upcoming econ events next week. We got FOMC minutes. That'll be on Wednesday, so maybe get some more clarity in terms of what the Fed is thinking and latest jobs. See if we get some questions on latest jobs and some of the tariff uncertainty. A couple of just call outs here at the end. Again, materials sector relative to the S&P 500. So this is XLB as a ratio chart to the SPY. And you can see this has basically just been in a downtrend over the past year. And you can see, again, with this outperformance this week, we got a nice kind of wick back up. Now, I'm not sure. I'm not convinced necessarily yet that we're going to see a massive rotation in leadership out of XLB, but it's certainly showing some signs of life. So I would pay attention to some of the stocks in this group. And if you have a stronger thesis, then yeah, maybe this is the higher low outperformance window that is coming for XLB, something to be aware of. I don't have a strong opinion, but I think it's interesting from a relative perspective. The other call out I wanted to make, I think this was a chart I posted on social earlier this week as well. This is Bitcoin miners, and Bitcoin miners have been an absolute just disastrous place to have capital parked for long periods of time. But when these things get going, they get going, and they do see some good momentum bursts, and we're certainly seeing it now. I tweeted this out or posted it a week or so ago about the miners starting to lead and outperform and just actually do something. And this is kind of the follow-up performance where it's continuing to work. So again, kind of bodes well when you start to see the more risky elements of the Bitcoin space perform. Then, usually you can lead and kind of front run a potential Bitcoin breakout. So some more evidence there. So that's all I have for prepared slides. I'm going to take it to TC2000. I want to show some trade ideas on our brand new Quant Rockets launch from this week. And then we'll look at some price action and call it a day. All right, we're back here with some charts. Let's look at some price action first, and then we're going to look at some individual trade ideas. So this is the S&P 500. This is the SPY ETF, and you can see that over the past 2 weeks, we've basically gone pretty vertical here. It's been orderly. It's been, we had a nice consolidation to work with. We went nowhere for call it 6 weeks or so in this range, slogging sideways between call it 580 and 600. We broke out about 2 weeks ago. And remember, we were, looking at these prior all-time highs as a magnet, as a place for the market to test and challenge and see how price acted at these all-time highs. And we're certainly seeing exactly how it's acting. And it's acting as fuel to the momentum train here of higher prices. So prior all-time highs did not act as resistance. We barely stumbled. We had 2 days of moving sideways and now moving back up into this holiday weekend. So there's clearly a good risk chase appetite right now. It's not a time necessarily to be complacent, but defense has really, been costing you money. Not to say that you shouldn't play defense, but, if you've been taking stops, if you've been, trying to be very disciplined, this has been a challenging market. A disciplined short-term trader that's taking, the stops, that's moving aside after a day or two down, you've not been rewarded for that because the bid just shows back up and stocks continue to grind. So at some point we will get the larger shakedown. We will get the bigger correction. It's just not yet. So for now, the way I would analyze price action would be just paying very close attention to the prior all-time highs here that we made in February. As long as the S&P 500 is above 612, I think last week I said 610. If we're above 610, then life is good. Ride the trends, enjoy the moves, look for stocks, look for setups. But if we start, crashing back down below 610, if we start reversing in a pretty violent fashion, then that would start to change the tune. So for now, while breadth is expanding, while sectors are working, I think the bulls are certainly in control. NASDAQ 100's pretty much the same thing. Again, it took a little bit of a slower move today, but it's still finished strong, still finished at the highs, and it's still above its February highs as well. So about 540, 535 or so is the area I would pay attention to there. And the Russell 2000, it's not all-time highs, but it is, certainly getting a slight uptick in momentum, some rotation here. So that's pretty nice to see for the small cap stocks. Now, I want to talk about some ideas. I want to talk about our new Quant Rockets dashboard, which officially launched this week. So this is a momentum dashboard. It's designed to help give a workflow, give some statistics, give some structure to momentum traders in this market. And so Quant Rockets is live. We had our webinar this week. Thanks for those who came out. I've favorited my 5 favorite stocks right now on this list. Some of these I have positions in at the current time of recording. And basically, stocks will move in and out of this list. They are ranked. They are analyzed. You can see historic stats. So for instance, our top row here, the good old MicroStrategy, now called Strategy. We've had some pretty good trades on this in our model. So we've had 12 trades in Strategy. We've had a 67% win rate and a win to loss ratio that is, of course, foolish. And we would hope and all be retired and rich if this continues for a long period of time. But a win to loss ratio of 11.75 because this is a great momentum stock. So Strategy, along with some others here, are on our list. Let's look at them right now. So MicroStrategy, we'll start there. You can see, I think the weekly view is really what you want to pay attention to here. Now, of course, you want to be bullish on Bitcoin. If you're bullish on strategy, they're kind of one and the same. And you can see that the weekly chart here is pretty fueled up. Now, it's been going absolutely nowhere for the past 6 weeks. It's traded between a 360 and 390 range. So there's fuel in this tank. This is kind of a week one up. And if this sees continuation, then I would expect some resistance in this 430, 425 area. But if we start moving above 425, there's a lot of blue skies above. There's a lot of short calls on this stock, and there's a lot of interesting dynamics that could really start to squeeze. So we're not there yet. We're still, trying in the breakout phase, but our Quant Rockets model did get involved in this 5 days ago. It's had a pretty good track record. I'm involved in it, and so we'll see if that can continue. Let's take a look at AS. This is another one that's, again, on our Quant Rockets list. This looks pretty good as well. I don't think I ever would have found this if it wasn't for this dashboard, but this has been consolidating at highs. Nice gap up. The gap up held, holding momentum nicely, and this is starting to move up here. I don't have a position, but I'm paying close attention to it. This entered the list 6 days ago. CAVA is another one of my favorites. CAVA is a trade I put on this week. So this came on to our Quant Rockets universe 2 days ago. This was on 7/2. So right here was the entry, I believe. Whoop. Yesterday morning, $85. Let's see if I get it. There it is. So CAVA's been beaten up for quite some time. It's been in a series of downtrends, but it's starting to make a corner. Take a look at the volume coming in here. So I like the potential. It had an amazing 2024. So let's hope it can repeat that for us right now. NXT, I'll just end it here on NXT. NXT looks amazing here. Solar has been a terrible spot to be, but I think I talked about this in a prior video or on social. NXT is clearly just bucking the trend as a nice leadership type of name. This has been on Quant Rockets since like right in here, and it's held on to it this whole time. So again, if we look at the patience that is potentially required on some of these names, it's been in it for 33 days, but now it's starting to finally reap some of those benefits here with some decent results over its historic models. So that's what I've got. Some different trade ideas there. There's 50 names on this list. They move in and out with upgrades and downgrades every single session. We've got a lot more information on our website if you want to learn more. Also have trial offers as well. So that is it. That is all I've got for this week. Enjoy the holiday. Thanks so much for tuning in. We do these videos every single week. So do check out the YouTube channel, the website every single week for your latest updates. And thank you so much. We'll see you in the next video update. Take care.